Good day, students, and welcome to all of my visitors to Managing Nonprofit Ministries. Particularly, we're looking at the management of faith-based nonprofit ministries. This is part 2 of the lesson. In lesson 1, we looked at the biblical stewardship side of managing your faith-based nonprofit ministry out of integrity. And throughout these lessons, you will see the significance and the importance of integrity as it relates to exponential blessings, God blessing your ministry in every conceivable way and expanding the boundaries, growing the boundaries, even from state to state with your nonprofit ministries regarding what you do. Now, this particular lesson focuses on what's illegal and knowing conflict of interest. Now, it's going to be an extensive lesson, so we may have to divide it into 2 parts, which no doubt we will do. But understanding the complicated nature of nonprofits from governmental mandates, from governmental statutory regulations, and reconciling it, if you will, in a balancing act with your vision and mission and purpose takes a lot of study and insight, because there's ambiguous language out there with the federal government with different states for a particular reason. So we're going to look at what's illegal and known conflict of interest, but we put it under the heading of developing and managing your nonprofit, because we cannot effectively manage our nonprofits unless we know something about how those nonprofits develop, which gives you the blueprint. So we're going to begin our lesson as we normally do with prayer. You can join me if you like. Let's pray. Gracious God, we thank you for opportunities to expand our faith-based ministries, our social enterprise ministries, and even our LLCs to places unheard of because of the opportunities that we have in this 21st century. Give the viewers, give the visitors, and particularly our students, insight into these concepts, principles, and points we're going to make about developing and managing our nonprofits through Jesus Christ. Amen and amen. So let's begin this lesson. And again, we may divide it into 2. Now, we've looked at, once again, the biblical side of stewardship regarding the management of your nonprofit. Now, that's the foundation for your nonprofit. Now, it's necessary, to look at the statutory regulation requirement side of developing your nonprofit, if you will, the secular side. We've looked at the sacred side. Now we're going to look at the secular side. In order to properly manage a nonprofit corporation, it becomes necessary for us to clear the air regarding the language used by varying states and the IRS about nonprofits. So we're going to begin there. Now, let's reiterate some things from part 1. First, procedures for organizing and developing proper management of a nonprofit. First, procedures. What are the first steps? We've got to go through protocol, and we'll get to what that means with developing nonprofits shortly. The first step is to start small and simple. I think we have emphasized and re-emphasized that point. We stated in lecture 1 that it's best to start out small and simple when developing and managing your nonprofit. Once you receive your determination letter from the IRS, and your board, you and your board can always go back and make amendments and add scheduled services that are outlined in the back of the 1023 application. If you look in the back of the application, there are other scheduled services that you can add later, but it's best to start small and simple to avoid any red flags that we might encourage the IRS to see regarding the scrutiny of what we're doing. So I think we've established that point. Now, we've got to follow, the second thing is follow proper protocol procedure. So let me give you a definition of protocol here because it has various meanings in different initiatives. Protocol here is precedent. That is something proceeding in order when dealing with regulation. So we've got to proceed in order. Remember, there are tons of professionals and non-professionals out there with varying opinions regarding the development and management of your nonprofit. So there are tons of voices you can follow, but it's best that you follow your own voice. Don't even follow my voice. Follow your inner personal conviction, because if God has called and anointed you to do this, He will screen what you learn and give you confirmation. So at the end of the day, you got to look at yourself in the mirror. So follow your own conviction, regardless of what's out there, professional and non-professional. Believe me, everybody's not saying the same thing, and everything everybody's saying is not right. Therefore, what one does first and second can vary in light of the various opinions out there. That's first and foremostly important for you to know and understand. Nevertheless, first thing should be first when it comes to processing your nonprofit. Now, think of what makes common sense when deciding what to do first, and it's always best to err on the safe side. Now, erring on the safe side means it's best to provide more than less. Providing more is less scrutinizing and more comforting than providing less, which sometimes opens up a can of worms and leads to scrutiny. Okay? So we're going to begin here in terms of proper protocol by developing several documents first, along with our articles of incorporation. And those documents should be set aside for later use when presenting to the IRS. Now, the point is, different states have different requirements for your articles of incorporation and other things. Okay? So that's the reason for that. So the most important information that should be compiled in conjunction with developing your articles of incorporation are your call and waiver of notice and minutes from your first annual board of directors meeting. Those two documents, they're set aside in your files for later when you submit your 1023 application. But they should be developed early with an initial meeting, and we'll explain why as we get into the lesson. Here's some of the things that you can include in your meeting. And again, follow your voice, your conviction, because eventually you're going to need these things when submitting your 1023 application. Your initial annual board of directors meeting should include the election and approval of directors and officers, adoption of the articles of incorporation, review and approval of the bylaws, although you're not going to present your bylaws to the Secretary of State in North Carolina. But they should be reviewed and approved at that initial meeting. The adoption of your corporate seal. And these are things that you can outline through direct communication with the Secretary of State's office to finally confirm. It's always good to follow up with what you're doing and compiling with a phone call and get confirmation. And sometimes it's best to get 2 or 3 confirmations from the same office because the opinions may vary. You may not agree with that, but live and learn. And I think you'll discover that to be true. Confirmation of your fiscal years. Usually nonprofits are fiscal years from July 1st beginning each year through June 30th of the following calendar year. Approval of your bank or depository, approval and adoption of corporation accountability, employee expense reimbursement plans, approval of organizational structure, you should put that together, your organizational structure chart, approval of a 3-year proposed budget plan. Now, I know that's a lot, but that's not even anywhere near half of what the IRS is going to require on your 1023 application when it comes down to you describing your services, describing who's going to get paid, how much they're going to get paid, etc., etc. So you've got some work down the road, but these are the initial things to get some of the brunt of the work out of the way. Be diligent, students and viewers, in what you're doing. Now, in the absence of a board of directors meeting and with consent of the board, the incorporator may submit a memorandum of and consent of action to the above items A through D. If you have the notes on this, you'll see that. So there are 2 ways you can approach it, depending on where you are in your development. Although the aforementioned documents are not included in your application for incorporation with the state, completing them early and laying them aside will expedite the process of determination. Now, let's look at the language, the lingo, if you will, of various states. The language of states and the IRS, like with income tax, is ambiguous, unclear, and open to interpretation on purpose because it works to the advantage. The language is unclear, like with your personal income taxes. It's unclear and open to interpretation on purpose because it works to their advantage. And let me tell you why. If you make errors providing information, it means more money for them. That's all. Because you're going to have to resubmit things and pay additional fees for all of this stuff. So the language is ambiguous. So you've got to connect the dots, navigate the course to understand it clearly. I'm going to add a little humor here. When dealing with governmental agencies, the first person you will meet is the customer service worker. Now, the information you receive depends on their mood at that moment, their knowledge, and their readily access to pertinent information. And that can vary from customer service worker to customer service worker. So you can receive different information. It's best that you connect the dots and navigate the system for yourself. So the information you receive may be piecemeal. My mantra in developing nonprofits or urban community development associations is research, research, research. You got the World Wide Web, the communication, the information highway to your avail. Google. When in doubt, I always say Google and Google several times. Now let's get into understanding the language. As mentioned above, number 1, the first step is to compile all documents that relate to your nonprofit's incorporation. Keep them in a file for quick reference and to submit to the IRS later. It begins with your articles of incorporation and important legal documentation confirmed by your board of directors. Concerning the articles of incorporation, here's a quote from the actual site. The information required differs in different states. However, there are some common information that are asked by almost all the states and so must be included in the certificate of incorporation accordingly. We're going to talk about that certificate of incorporation in a minute. Now, common things from state to state are called common law by the IRS. So there are some common law things that stretch across the board with each state, but there is some variance. Now, depending on the state, they consider the form that you fill out and submit. And this can be confusing to some people. It's the language. they consider the form that you fill out and submit your entity's, your corporation's article of incorporation. Now, it's a simple form that you fill out, and 7 and 8 in the state of North Carolina allows you to make additional attachments concerning segments of your articles. Now, actually, that form is your certificate of incorporation that they stamp as filed. Now, let's manage. We're learning how to develop so we can manage. Now, the state doesn't approve your articles of incorporation. I mean, your incorporated entity, unless you are establishing an unincorporated nonprofit. Now, tons of people don't know that you can establish an unincorporated nonprofit with the state without filing a 1023 application, which is another subject itself. But it means this: unincorporated nonprofits can be established for small nonprofits. If you're a small nonprofit that do not raise more than $25,000 a year in income, okay? And so they can go straight to the state and establish an unincorporated nonprofit. When they file your articles of incorporation, they are considered registered in a central database. So when you submit that application form, which is your certificate of incorporation, they consider it registered and they file it, and it goes into a central database. It is the IRS who approves your corporation's 501c3 charitable organization. The state doesn't. So keep that in mind and don't get the two confused. They're not approving your corporation. They are giving you a certificate of incorporation, if you will, like unto a license to conduct your corporate purpose in that state. And you can be an unincorporated nonprofit. Now, however, the language doesn't read clearly. A certificate of corporation is a legal document relating to the formation, this is an actual code, relating to the formation of a company or corporation. It is a license to form a corporation issued by state government. Its precise meaning depends upon the legal system in which it is used. So understand the different corporations, from social enterprise to LLCs. On the certificate of incorporation form, the state of North Carolina will give you the option to attach segments of your articles of incorporation under 7 and 8. It says, attached are provisions regarding the distribution of corporate assets upon dissolution. That's one of the articles in your total articles of incorporation. 8. Any other provisions which the corporation elects to include are attached. Now, this means that you have the option to attach any or all of your articles of incorporation to that certificate of incorporation when you send it in. I suggest attaching your complete articles of incorporation. If they reject it, which I doubt, and want less, then they'll let you know what they want specifically. And that's erring on the safe side. The reason is, as with income tax, the state and the IRS interact with each other. They interface with each other regarding exchanging information submitted by incorporated. Now, let's look at the common law, what I call the common law laundry list of statutory requirements. There are other things besides that number 7 and 8 that I mentioned. Let's begin with this statement taken actually from the Secretary of State's office. A nonprofit corporation is a corporation intended to have no income or intended to have income none of which is distributable to members, directors, or officers. Nonprofit corporations are distinguished from business corporations not by their organizational structure, nor by the process of management of their organization, but by the purpose of such organization. So the main thing they want to see in your articles of incorporation are the purpose for your charitable organization, which is one of the items in your articles of incorporation. Unlike business corporations, nonprofit corporations, continuing to quote, are not organized to make profit or financial gain for their owners. They may be formed under North Carolina law for any lawful purpose. These purposes, and that's broad, these purposes include charitable, civic, community welfare, religious, and scientific. This list is not exclusive, however. Many other types of corporations may be categorized as nonprofits if they satisfy the statutory requirements. Now, the nonprofit's purpose must stand out in your articles of incorporation and your bylaws. It needs to jump out at those that are reviewing your documents. Let me give you a succinct definition of articles of incorporation. Articles of incorporation are the legal documents which must be filed in order to form a corporation. You fill out the certificate of incorporation. They file it, stamp it, retain a copy, and send a stamped copy back to you for your records that you'll later submit to the IRS with your 1023 application. Actually, the IRS will already be privy to it because the states and the IRS exchange information. Now, designation as a charitable or religious organization. A corporation which is exempt from taxation under Section 501c3 of the Internal Revenue Code is called a charitable or religious corporation. That should be clear in your purpose in the North Carolina Nonprofit Corporation Act. This term also includes a corporation which is organized exclusively for one or more purposes specified in Section 501c3 and which must distribute its assets upon dissolution to another charitable religious corporation or to the United States or another state. Another item that should be included if you're not going to include your complete articles of incorporation is your dissolution clause. How if upon dissolution where the assets and the physical things of your nonprofit will go. If you intend to apply for IRS federal tax exemption as a charitable organization, your articles of incorporation must contain a required purpose clause and a dissolution of assets provision. Now, that comes from the state itself of North Carolina. Now, it should include a registered office and an agent. It should include the incorporator, and that's on the certificate of incorporation. Members, whether you are a non-member vote, a corporation or a membership corporation, and dissolution of assets, and your principal office. Now, those are things that are on certificate of corporation, certificate of incorporation, and can be attached, added under number 7 and 8 in the state of North Carolina. Now, here are some optional provisions that you can or you don't have to submit to the state, which is primarily about your complete articles of incorporation. The articles of incorporation are allowed but not required. That comes directly from the state. To set forth any provision that can be included in the bylaws of a non-profit corporation. Let me read that again because it's a direct quote. The articles of incorporation are allowed but not required to set forth, that is, you can state in your articles of incorporation any provisions that can be included in the bylaws. In other words, you can have these provisions in both. A complete set of bylaws, however, will not be filled with the North Carolina Department of Secretary of State. In other words, they don't want your bylaws. But you can have some of the things that's in your articles of incorporation in your bylaws. The articles may also contain these things: a statement of purpose or purposes for which the corporation is organized. We've already talked about names and addresses of initial directors, provisions relating to the management and regulations of the corporation's affairs, provisions which define, limit, and regulate the powers of the corporation, its directors and its members or any class of members, provisions defining the qualifications, rights, and responsibilities of its members, and provisions limiting or eliminating the personal liability of any director for monetary damages for breach of any duty as a director. So I think hearing that will give you to understand why I stated early on, it's a good idea to give them more than less, because you completely cover yourself. In other words, in plain simple language, you're covering the bases just in case. So keep that in mind as you go through things relative to the development of your nonprofit, so that you can be fully aware of how you should manage that nonprofit. Knowing the development intricacies will help you manage your nonprofit better. Powers. Now, the North Carolina sets forth certain powers that all nonprofit corporations have, unless the Articles of Incorporation state otherwise. Because these powers are statutory, they are automatically built into the requirements. They do not need to be listed in the Articles of Incorporation. So you don't have to list your powers of your corporation, because it's insinuated statutorily. You don't have to put a period of existence, but I believe in covering all the bases, giving more than less. Unless the Articles of Incorporation or the Nonprofit Corporation Act provide otherwise, every nonprofit corporation is presumed by the state of North Carolina to have perpetual duration. So you don't have to add it. I believe in adding it. Consequently, it's not necessary to set forth a period of duration in the article. Now that's the first part of the development of your nonprofit, and hopefully it's given you insight on how you need to manage that nonprofit down the road. Now, let's look at filing the document. The Articles of Incorporation signed by the incorporator must be submitted to the North Carolina Department of Secretary of State. There's a $6 fee for that. They'll examine the Articles of Incorporation. Remember, they're not approving the articles, they're examining the articles. If something is missing, they'll contact you and let you know. Okay? That's less. If it's too much, they'll also let you know. They're examining the articles. And if the articles satisfy the requirements at that point of the North Carolina Nonprofit Corporation Act, which is pretty plain and simple, they will be filed by date and time stamped. Copy sent back to you, a copy they'll retain. Now, the signed original will be retained by the North Carolina Department of the Secretary of State. A copy will be certified and returned to the person who submitted it for filing, either electronically, via email, or through regular email. Now, North Carolina does not require Articles of Incorporation to be filed with the Office of the Register of Deeds in your city. But if your corporation owns property, it's recommended. But North Carolina, and remember, the statutory regulations vary from state to state. Some states require that you file your articles with the Register of Deeds, but it's not required in North Carolina. But if you own property, if you have real estate, or you plan on getting real estate, you should look into it with your nonprofit. While the application is pending, after satisfying the initial steps, the next step, and remember this is protocol, step by step. The next step is to open a bank account for your corporation which will require an EIN, an employee identification number. However, applying for an EIN, employee identification number, sends out a signal to the IRS and implies annual filings, because your EIN doesn't come from the state, it comes from the IRS. They interface. So when you apply for it, it sends out a message to the IRS that you're conducting business. So it implies filing. Now, two forms, and we'll say it simply here, need to be filed annually to the IRS. For in-house, your 990 forms, and we'll talk about that later. That's for in-house compensation. And 1099 forms for those who provide service coming from the outside. So just keep in mind your 990 forms and your 1099 forms as we go through this in terms of filing. Use those as mnemonic devices in your mind. 990, 1099 annually for filing. In-house compensation, those who provide services, honorariums, contracts from the outside. Now, it's broader than that, but I'm just giving you a brief highlight of it so you'll have an idea of what you need to prepare to manage up front. And I hope you get that. Now, please see for my students, I've uploaded several files that covers everything about annual filing that you need to manage. Okay? Download that zip file, keep it for your records, and use it as a reference. They come from the actual sources, and they cover everything that you need to know about filing. Okay? Now, state filings. Most states require nonprofit corporations to file one or more reports or registrations every year. It's about registering every year that goes into, central database. In general, there are 4 different kinds of filing requirements with the state. So keep this in mind, jot it down, and highlight it. Corporate filings, financial reports, fundraising, registrations, and state tax exemption filings. So those are the 4 things you need to keep in mind when filing annually to the state. Many state associations of nonprofits offer summaries of the filing requirements that apply for nonprofits in their state. So you can find all of that out. I think calling is a great tool to get confirmation on what you need to do. Just don't take it for granted and be naive. When is Form 990 due? That is for in-house compensation. Form 9, one of the students asked this, and that's why I'm bringing it up. Form 990 is due on the 15th day of the 5th month following the end of the organization's taxable year or your fiscal year. Form 990 is due on the 15th day of the 5th month following the end of the organization's taxable year. So you calculate that. For organizations on a calendar year, the Form 990 is due on May 15th of the following year. I think that's pretty simple. So keep those things in mind that I've just mentioned in terms of managing your nonprofit. Keep it before you with your officers. Now, if you want more instructions on annual filing with North Carolina, you can go online to online annual filing instructions. I've also uploaded that document to that zip file that I indicated. So these things are important to keep in mind in learning to manage your nonprofit. We're going to conclude here, and in our next session, we're going to continue with additional information, and we're going to look at the intricals of a nonprofit conducting for-profit business ministry, which can be another revenue stream for funding your nonprofit. nonprofit can actually conduct for-profit business ministry. We're going to look at that in the next webinar and go into some of the more intricate details of developing your nonprofit and managing your nonprofit. I hope you've been blessed in some kind of way. Remember, I believe in this day and age that we live in, given the many factors of the 21st century, I think it's time that we empower ourselves, that we build our own individual businesses, ministries, corporations, and companies, and that we learn how we can do it through social enterprise, LLCs, and particularly for my students, faith-based nonprofits. Let's be empowered with an abundant life. And join me for the next session of developing and managing your nonprofit. Enjoy your day and be blessed.